Let's go to Tim Ward. Tim, how are you, Tim, from the Ward Oracle? How are you doing?
Good, good. Thanks for having me on again.
Pleasure.
Market's a little kind of wonky here. I was kind of at one point I was thinking we're going to pull back to around 620, which is basically the February highs. And actually, I changed my tune on that. I don't think we're going to do that. The reason why, uh, over the last, I don't know, we've been on for what, a couple of years, maybe 3 years now, and I kind of preached the panic situations on the trend and
Correct. Yeah.
ticks. And so anyhow, you know, I I listed that the ticks and trend, all those blue lines are when ticks and trend basically reach panic levels, and panic only forms at bottoms. And anyhow, so I colored that in pink where those ranges occurred, where the trend and or tick reached panic levels. And actually, on this last rally up, as it was rallying, the ticks and trend, in most cases, this case right there was actually, it should have been a bicycle. I was looking at some other stuff. But anyhow, we quit getting panic and tick readings the last 4 or 5 days. But if we pull back into that level again, anyhow, this pink area is the times where the ticks and trend reach panic levels, or at least one of the two did reach panic levels, and that's support area. And that support area comes in around 650 to 640. So there's really not much downside. So that's
just from a week ago, Tim. That's where we were just a week ago.
Yeah, just a week ago. So, we're probably going to find support. The last time we did this, we kind of busted out here, and we went right back into that panic level. And that's pretty much where that market bottom went back up, came back down into the panic level again, which is this area, and market rallied up. Now it created another higher panic level, again, 650, 640. So I don't think we're going to get down way down here at 620. I think this area of 640, 650 is probably going to hold. So there's not much downside. I thought about shorting the market, but what I'm going to do, probably the better trade, since momentum is definitely up because we're making higher highs, higher lows, I'm going to buy the pullback if there is one, and I think there will be one here. And somewhere in this vicinity between 640 to 650 is probably where that buy signal is going to generate. So once you get a panic area where the trend and ticks reach panic levels, going back into that area, normally you get panic again, just like this reading right here, heading into that panic level right below it. It was a day early, but anyhow, it tells you that going into this area right here last time was a panic level, and you should be buying it. And actually, I did get long in this vicinity somewhere. I didn't hold that position, but now I'm getting quite a bit of confidence. Actually, it's flipped. This is another way to look at the ticks and trend. This one goes back, looks like about 2002 to 2024. But all the shaded areas, the bottom window is the 3-day trend, next window up is a 5-day trend. Then you got a 10-day trend, which is most important. It's actually not, 10-day trend is not 0.99. Actually, it's 1.15. You can't quite see it there. We're up 1.55. So if we pull back, most likely we're going to get that trend up to around 1.2 on the 10-day, and that's going to be a buy signal. The 5-day did hit bullish levels here a few days ago above 1.2, and the 3-day trend is really not that important, but the 5 and 10-day trend is, because the 10-day trend is basically 2 weeks of trading. The 5-day trend is a week of panic levels. So you get 5 days of panic, you're getting close to a low. 10
Can I
days
just
panic,
ask?
Sure,
Tim, I just
go
want
ahead.
to ask you, right now, the VIX index is up 62 cents at 16.31. The Dow's only down 151. The S&P is down 6 points. What is that? 6 points? 8 points. When last did you do your VIX reading today?
Yeah.
So isn't that interesting that the market's barely down? In fact, the S&P is almost unchanged, and that VIX is this? Do you think it's insurance or something for tomorrow? Does that correlate with anything in your work?
Yeah, it does. This is the SPY VIX ratio I did earlier today, And over the last couple, actually since when is this? So mid-August. This is probably about mid-August when the market was going higher and the VIX started peaking out, and it's really gone down. The SPY, or no, this is a tilt ratio. I put the wrong chart up. I meant to put the chart up of the VIX, but the VIX was showing. This is the for some reason that dropped off. Let me get it back. Yeah, this is. I meant to put the SPX VIX ratio. Did I? No, I didn't. Yeah, that was supposed to be up there, but the VIX is looking similar to the SPY tilt ratio.
Okay, good.
So anyhow, yeah, the VIX is actually going up. Matter of fact, yesterday the S&P was up and the VIX was up. That's usually a bearish sign. And now we're pretty much unchanged on the SPY today, and the VIX is still up. So that's warning that a pullback. That's the reason why I think we're going to get back into this region of 640, 650. Maybe not this week because this week's option expiration week, but probably next week we'll get into that. And I think we'll probably end up in a buy signal somewhere, give or take 645. It may be in the top of the trading range or the bottom of the trading range. But this is the area where the panic tick readings happen. So I'm talking about this area right here. So that's where I'm probably going to end up with a buy signal. I still think it's a trading range. I don't think the rally is going to continue all the way into year end because September, October are basically the worst 2 months of the year, and they're back to back. So they'll probably go up, and the VIX will probably give a warning sign. Here's the VIX right now. You can see the VIX up there. Even though we're pretty much unchanged, the VIX is going up. So will the top happen today? The market may hold up until, since the expiration week. I wouldn't be in a hurry to short it on a Tuesday, maybe Thursday or Friday if we're still up here. We may get the pullback. But a minor pullback, nothing significant.
Very good. So let's come back because everybody's waiting to hear your next about the analysis on your next chart. This is Tim Ord, folks, from the Ord Oracle. And this is Basil Chapman sitting for Tommy O'Brien and the Tom O'Brien Show. We've got the Dow right now coming back a little bit, just down 120, and the S&P is down 6.79. We'll be right back. Hi folks, we're back and we're looking at the Dow down just 132 points. S&P is down, down 6 points, and we're on with Tim Ord. Tim, what chart would you like to go to next? Unless you want to continue with the one you had.
No, we're going to flip to gold here. This chart is, where's the GDX? GDX is in the top window. This chart goes back to, looks like about beginning of 2006, so it goes back quite a ways. And momentum's your friend. So what I did have is the GDX up down volume cumulative. And I think this is a monthly chart right there. It's a monthly cumulative up down volume, which is the bottom window. Next window up is a cumulative advanced decline. So it's a momentum chart that measures the advanced decline cumulative and up down volume cumulative, and that goes in the direction of the market. So when both those indicators are going down, it's a down market. When both are going up, it's an up market. And I use the Bollinger Bands to identify the up and down, I guess. Once this indicator falls below the mid-Bollinger Band on both those indicators, which it did back in 2012, remained on a sell signal all the way into, looks like about January 2016. Right. So that was a 4-year decline because declining, we're outnumbering advancing, and down volume is outperforming. Down volume is outperforming up volume. So basically, it's definition of a downtrend. So you got a buy signal in January that lasted, looks like about 2 years. That's the blue area. Then you got a sell signal again, and it looks like about a year and a half, maybe somewhat in that vicinity. Then about mid-2019, you got a buy signal that lasted in 2021 of January. You got a sell signal, and that was the last sell signal in 2021. And you just got a buy signal here. It looks like approximately January of 2024. So now you're on a buy signal because advancing issues is outperforming the declining issues, and up volume is outperforming the down volume. So both those indicators are going up. So you're definitely in a bull market. So how long the bull market's going to last? Well, this one, 2012 to 2006, that was 4 years. Then 2021 to 2024, that was 3 years. So we've been at it right now a little over a year and a half. So can it go on for another couple of years? Yeah. There's no sign of a top yet by using this momentum indicator.
Tim,
So
can I just ask you, what is the dash line? Is that an overbought signal, or just to tell you that that's where you last were? The top chart, and you've got the horizontal, the very top horizontal line.
This one right here.
Yeah.
That line is just basically the top of GDX in 2012.
Okay, that's okay. Good.
That just says that's just top. So what I want to point out, we're above the 2012 high right now.
Right, a bit above, yes.
Yeah, so that's the reason I put that line there. So it's just previous highs, whatever. So so we're way above. We're up around 70 or close to it. So where are we going to go? So you got to really look at the bigger time frames, because the character of the market has changed. I was looking at a month and a half ago, I was looking at a monthly RSI above 70 have picked out the previous highs in GDX going back 3-4 years. Well, that has changed now. RSI has got way above 70, so that indicator's not working. It's one of the reasons why I actually went short GDX, because of that indicator, another indicator, where both those indicators failed. So you got to go where the indicators are working. And this is one. This never gave a sell signal at all. It just momentum was going up. But how far can we go up? Well, this is one indicator that can kind of give a clue. This is the weekly HUI gold ratio, and I marked the times going back to look like about 2012, mid 2012. Anything below 0.12 was a buy signal. On a bigger time frame. This is not met to day trade, obviously, because this bicycle back in 2016 started about 6 months earlier before the bottom actually happened. But once it did happen, he went vertical, and it peaked in around 0.17, approximately 0.12, give or take. And we're coming in around this indicator. 0.15 right now. So we got room to move higher until we get into this overbought area where previous highs have occurred before. And that's all these purple areas or blue areas. I'm a little bit colorblind. Those came at tops. Here's the GDX up here. That was the top. That was the top. That was the top. We're not near a top yet. But it kind of measured the valuation of gold stocks compared to gold. So if we get up to 0.17 to 2.0, will that be a top? Well, it could be. We'll have to wait and see when we get there what happens. But that's my opinion right now. I think we'll probably at least reach that area, if not exceed it, because it's going over back to 2013. So that's 12 years ago. It picked out quite a few tops in the past, so we'll see how that works out. But we're not near a top right now, so I think we have room to move to the upside on the bigger time frames. And here's another valuation. This is a monthly silver gold ratio. Not the gold silver, but the silver gold ratio. It just matches better to what the S&Ps or matches better to what the XAU is doing. And this ratio is still in a buy area. Anything below approximately 0.012 down to 0.011 or 0.010 is a buy area. And we're still in that buy area according to this valuation. If it gets up to around 0.18 to 0.20, you have previous highs in the gold issues. So anyhow, the 2011 high came way the heck up here. That was a major high. These are kind of minor highs, but anyhow, that's another valuation. So this ratio's got room to run. So that's not even near anywhere a high. Here's something I want to point out. this is maybe what's happening going forward on this is the monthly HEU to NASDAQ ratio. And it goes back to 1992. The data didn't really start until about 1996. And I wish I could go back further, but it appears to be a 12-year cycle. This is basically 2000 bottom.
Oh, isn't that interesting? Yeah.
Yeah. And then we had a high here of 2012, went down to 2024, clicked the bottom, and now we're going up again. And so I'm thinking the way this market's rallying, and there's a lot of formations that are on a lot of the gold issues. But anyhow, in a nutshell, if the RSI is below 50, then HUI is underperforming NDX. If it's above 50, HUI is outperforming DX. I put the RSI up in here so you can see as long as the RSI held above 50, yeah, the uptrend was intact. When it fell below 50, the downtrend is intact. Well, right now we're above 50, and we could be in a 12-year cycle going higher.
Isn't that exciting? Wow.
Yeah, it is. So.
Yeah. Wow, thank you, Tim. That's really great information. Really appreciate it. So today being Tuesday, you'll be back with Tommy on Thursday, and everyone's waiting to see what happens over the next few days, especially with the Fed. So thank you very much for that information, folks. Tim Ward from the Ward Oracle. Check him out. Great information, as you heard.